Ladies and gentlemen, dear viewers, imagine this. A metal once dismissed as second fiddle is now quietly building the foundation for what could be the greatest wealth creation rally of our time. Yes, I'm talking about silver. The fascinating thing about silver right now is not just its price action. It's the underlying shift that almost no one is paying attention to. When markets overlook an asset this essential, in an environment this transformational, it often signals the beginning of a dramatic repricing cycle. And silver, with its dual nature as both an industrial necessity and a monetary hedge, is positioned at the center of several converging global trends that could ignite a rally far larger than anything the mainstream is expecting. We are watching a world rapidly electrifying, solar installations accelerating at record pace, EV penetration rising every single quarter, semiconductor demand reaching historic highs. What these sectors share is a growing dependence on silver. Not as a luxury metal, not as an investment afterthought, silver is a critical input. Solar photovoltaics alone quietly consume hundreds of millions of ounces every year, and that number is not stabilizing, it's accelerating as nations commit to aggressive renewable energy targets. When industrial demand is tied to innovation and technological scaling, it becomes remarkably resilient. At the same time, global mining supply is struggling. Silver production has been flat to declining in several major regions, and the majority of silver is produced as a byproduct, meaning supply cannot be easily increased in response to rising demand. This is a structural imbalance, not a temporary fluctuation. Markets can ignore it for a while, until suddenly they can't. Historically, when markets finally recognize structural shortages, price adjustments happen fast, often violently. Layer onto this a macro environment defined by monetary uncertainty. Interest rate cuts on the horizon, elevated debt loads in major economies, and currencies under pressure all build a compelling case for tangible assets. Investors aren't just searching for hedges, they're searching for assets with real utility and constrained supply. Silver sits uniquely at that intersection, and unlike gold, which moves primarily on sentiment, silver has a built-in industrial floor that strengthens during innovation cycles. This is why the idea of a massive silver rally, even one that pushes toward extreme upside scenarios like $600, is not rooted in fantasy. It's rooted in math supply, demand, scarcity, and the accelerating adoption curve of technologies that rely on this metal. Markets often misprice assets during transition periods. We've seen it with electric vehicles, with digital networks, with biotech, with AI. The pattern is always the same: long periods of underestimation followed by rapid, dramatic catch-up. Silver is exhibiting the early signs of that mispricing today, and what's most striking is how few investors are positioned for it. The focus remains elsewhere, on headlines, on short-term volatility, on sectors that have already run. Meanwhile, silver sits quietly at a point of maximum asymmetry. Limited downside due to industrial demand, yet enormous upside if financial conditions tighten, innovation accelerates, or investment flows return. When multiple catalysts converge, macro, industrial, technological, the result is not linear, it's exponential. So the real question is not whether silver can move higher. The question is how quickly sentiment could shift once the broader market realizes the fundamentals have changed. When an asset becomes simultaneously scarce, essential, and underowned, history shows that its revaluation can be both swift and dramatic. That is why this moment feels so pivotal. We may be standing at the threshold of a rally few are prepared for, not because the data isn't clear, but because the world is still thinking in yesterday's framework. But markets don't reward backward looking. They reward those who recognize the inflection points early, before the crowd, before the headlines, before the price surge becomes obvious. If you'd like, I can also create a shorter version, a more dramatic version, or a YouTube narration style version of this same speech. The most important dynamic unfolding in the silver market right now is not the price movement you see on the chart, it's the shift happening underneath, a shift that rarely happens quietly, yet this time it's nearly invisible to the majority of investors. When markets change this subtly, it often signals the early stages of a powerful breakout. And silver is showing every early marker of a market preparing to reprice, not gradually, but abruptly. We're entering a phase where technology, energy transformation, and monetary instability are intersecting in a way that puts silver in an irreplaceable position. Think about the scale of global electrification underway, solar expansion hitting new annual records, electric vehicles climbing toward mass adoption, AI-driven data centers consuming unprecedented power, and a worldwide infrastructure shift that demands conductivity, reliability, and efficiency. Silver sits at the core of all of these. It is not optional, it is essential. Industrial demand isn't just steady, it's compounding. At the same time, the mining sector is signaling real constraints. Silver isn't mined like copper or gold. Its supply is tethered to other metals, and that creates a lag in responsiveness. Even as demand surges, production isn't scaling, and ore grades globally continue to decline. For investors who understand resource cycles, this is the exact configuration that precedes parabolic moves. Accelerating demand meets structurally limited supply. Markets often dismiss this until the imbalance becomes undeniable. Then they react all at once. Now add the broader macro environment. Central banks are shifting tone. The global economy is wrestling with debt burdens that require lower interest rates to sustain. The dollar is losing some of its relative strength. Inflation, though cooled in data terms, remains embedded in the real economy. When these factors converge, capital tends to migrate toward real assets, toward tangible stores of value, toward assets with scarcity and utility. Silver stands uniquely at that intersection, industrially indispensable, financially relevant, and historically underpriced relative to gold and other hedges. This is why the possibility of a silver mega rally no longer sits at the fringe of speculation. It's increasingly supported by fundamentals. The investment community has not woken up to the scale of the green energy transformation or the resource demands of next-generation manufacturing. They haven't priced in the monetary conditions that favor metals with scarcity profiles. They haven't appreciated how much of this demand is not discretionary, it's bound to global policy commitments, corporate scaling, and technological imperatives. In other words, it's durable. What makes this moment especially compelling is the sentiment disconnect. Silver is historically most explosive when the majority is not paying attention, when positioning is light, when narratives are focused elsewhere. Right now, the spotlight is on equities, artificial intelligence, and large-cap tech. Meanwhile, silver is in the early stages of tightening fundamentals, rising industrial offtake, and renewed investor accumulation. The puzzle pieces are assembling quietly but unmistakably. The question investors should ask is simple. What happens when markets collectively realize the supply and equation has already broken? Prices don't move slowly in those moments. They reprice violently. They jump levels. They create rallies that seem exaggerated only to those who weren't tracking the underlying transformation. And that's why this moment feels like a warning, not in the sense of fear, but in the sense of opportunity. The early signals are flashing, the conditions are aligning, the catalysts are material, not theoretical. Silver doesn't need hype to move, it needs recognition, and when recognition arrives, it tends to arrive fast. If you want, I can also expand this into a voice-over-friendly script, a more dramatic version, or create 3 alternative angles for your YouTube content. What makes the silver market so compelling right now isn't the price level you see today, it's the structural pressure building beneath the surface. Markets often misinterpret calm as stability. when in reality it can be the quiet before a violent repricing. And silver, perhaps more than any other asset in the commodities space, is positioned at the center of multiple disruptive forces that are about to collide. That's why predictions as bold as $600 silver are no longer outlandish. They're a reflection of how dramatically the fundamentals are shifting. What we're witnessing is an acceleration of global demand unlike anything in previous commodity cycles. Silver is not just a precious metal, it is the linchpin of modern electrification. As the world races toward renewable energy and digital infrastructure, the need for a metal with conductivity, durability, and efficiency becomes non-negotiable. Solar installations alone, growing exponentially year after year, are consuming silver at a scale that miners cannot match. And as solar panels transition to more efficient technologies, silver loadings haven't decreased. They are holding or rising, driven by the push for higher efficiency and lower resistance. Then consider electric vehicles. Every EV on the road requires significantly more silver than a traditional combustion engine vehicle. As adoption passes inflection point levels, the demand curve steepens. Add advanced electronics, 5G networks, data centers, AI hardware, medical applications, and high-tech manufacturing, all silver-intensive sectors, and you begin to see a picture that contradicts the traditional view of silver as just a monetary metal. Its industrial backbone is strengthening at the exact moment the global supply is tightening, and that's where the story becomes even more dramatic. Silver mining has not kept pace with demand. Most silver is produced as a byproduct of zinc, copper, or lead mining, meaning supply cannot simply scale up because silver demand increases. That structural limitation is critical. Miners can't just turn on more supply. With declining ore grades and limited new discoveries, the supply side is rigid at the very moment demand is accelerating. This is the exact configuration that precedes seismic price movements. Layer onto this the macroeconomic backdrop, one defined by elevated global debt, shifting central bank policy, and long-term inflationary pressure. Even in periods where inflation moderates temporarily, the underlying monetary system remains stressed. Investors and institutions alike begin searching for assets with built-in scarcity and real-world utility. Silver sits uniquely at this intersection. Gold offers security, but silver offers security plus exponential industrial leverage. And historically, when silver begins to move, it often outperforms gold dramatically in percentage terms. What makes the $600 prediction so compelling is not the number itself, it's the combination of forces that could create a supply shock. Markets routinely misprice assets that sit at the crossroads of disruption. It happened with electric vehicles, with digital commerce, with cloud adoption, with AI. In each case, the market underestimated the speed of adoption and the constraints on supply or infrastructure. Silver is now entering that same dynamic: underestimated demand, misunderstood supply, and a macro environment that increasingly favors real assets. A price explosion in silver would not be fueled by hype, it would be driven by recognition. Recognition that industrial demand has permanently broken the old pricing model. Recognition that the supply chain cannot be expanded quickly enough. Recognition that monetary instability elevates the role of metals that combine scarcity with technological relevance. This moment is not about speculation. It's about understanding the inflection point the world is crossing right now. When the market wakes up to the reality forming underneath, silver's revaluation could be sharp, aggressive, and far beyond what traditional analysts expect. Predictions like $600 no longer sound extreme when viewed through the lens of exponential demand curves and constrained supply. They sound increasingly plausible. If you want, I can also expand this into a more dramatic YouTube voice-over, a short punchy version, or a high intensity script for maximum retention. What's happening in the silver market right now is not simply another price move, it's the early signal of a structural transformation that most investors haven't even begun to understand. When markets behave quietly just before a major shift, that silence can be more telling than any spike on a chart. And 2025 is shaping up to be the year when silver stops following the old rules and begins responding to a new global reality being shaped by technology, energy transformation, and monetary instability. The world is entering an era defined by massive electrification. Every country, every major corporation, every sector tied to technology or energy is accelerating into a future powered by electricity. Solar installations are reaching all-time highs. Electrified transportation is scaling globally. Data centers, driven by AI, cloud computing, and digital infrastructure, are consuming extraordinary amounts of power. Each of these industries depends on a metal that is unmatched in conductivity, efficiency, and reliability, silver. The industrial backbone of silver isn't speculative anymore, it's foundational. And when industrial demand becomes foundational, price floors start to rise permanently. Yet, even as demand accelerates, the supply story is moving in the opposite direction. Silver mining has entered a period of constraint, declining ore grades, underinvestment in exploration, and the fact that most silver is extracted as a byproduct from other metals limit the industry's ability to scale production. Even if silver prices surge, miners cannot rapidly increase output. This disconnect between rising demand and limited supply is the kind of structural imbalance that historically precedes explosive price moves. Markets ignore these imbalances for years, and then suddenly correct with extraordinary force. 2025 could be the year that recognition phase begins. Investors are already sensing the early tremors. Physical inventories are tightening. Premiums in some regions are rising. Industrial consumers, especially those in solar and electronics manufacturing, are openly discussing long-term procurement concerns. These are not signals of a temporary trend. They are signals of a market that is beginning to strain under its own fundamentals. When fundamentals tighten first, price action eventually catches up and often overshoots. The macro environment only amplifies this setup. Global debt remains at historic highs. Interest rate paths are shifting. Monetary authorities are balancing economic stability with inflation management in ways that create volatility across currencies and financial markets. And in uncertain monetary climates, tangible assets with scarcity and utility begin to behave differently. They attract both defensive capital and speculative capital simultaneously. Silver, uniquely positioned as both a precious metal and an industrial necessity, becomes a natural beneficiary. What makes 2025 feel like a historic setup is the convergence of catalysts. Any one of these forces, industrial demand, supply limitations, monetary instability, could move silver on its own, but this time they are aligning together. That alignment is rare, and when it happens in commodity markets, the outcomes can be extraordinary. This isn't about small price fluctuations. It's about the possibility of a repricing event that forces the world to revalue silver based on what it has become, not what it used to be. The most surprising element is how dramatically investor sentiment diverges from the reality forming beneath the surface. The majority is still distracted by equities, AI narratives, and short-term cycles. Silver sits outside the spotlight, quietly tightening, quietly preparing, quietly building the conditions for a move that could catch almost everyone off guard. Historically, the largest commodity rallies begin in silence, when investors are least positioned and least attentive. That's when opportunity builds. If this truly is the beginning of a historic surge, it won't unfold slowly. Once the market realizes that the old assumptions about supply, demand, and price ceilings no longer apply, the shift could be rapid. Silver doesn't need hype to move, it needs recognition, and recognition is coming faster than most expect. If you want, I can rewrite this in a more dramatic YouTube voiceover tone, a shorter, punchier 300 word version, or a more emotionally intense style for viewer retention.